Hello, good morning, guys, or actually good afternoon. Sunday, January 26th. And I thought it would be a good to make a little video on the dot indicator that we have been broadcasting on our YouTube channel since the past little bit more than a week now. Just go through some of the recent trades and just give you some more background information about this thing, right? So, before I get started, I just want to tell you that trading is just mainly you against yourself. Market does not care where you enter, how many contracts you're buying, where are you exiting, what your read is. It does not matter. It's just your own self-discipline, your own self-control. So your ability to not trade based on your urges or what you think market can do. So any indicator for that matter will give you some sort of a system to follow, some sort of a process to follow, right? So the background that I want to share is that when you're trading futures intraday, right, chances are that you're trading based on some lower time frame, right? So if I go into a minute time frame, right, like 1 minute or 5 minute charts or even Ninja Renko, right? So let me actually bring up the Ninja Trader view. So this is tick chart, right? And for the same time period, if I bring the Ninja Renko chart, this is what it looks like. A minute chart would look something like this, right? So every day has its own composition, and how that composition is for that particular day in relation to your strategy, that is what decides the outcome of your day, right? So every day you will have these lines, this composition, right? For example, this is a day, right? This is a composition. It could easily have been this thing, right, where it just keeps on going up, or it is a slow melt up, right? So it's just every day its composition is different. It's pretty random, right? There's no way you can predict that, right? So if you're trading intraday futures, the composition of the day is unpredictable, right? So the idea is to trade only in the time period or in the market condition when a specific strategy has a high probability of success, right? So composition of that chart itself is so random that it is at least humanly impossible to remain consistent in its traditional definition. So you have to be consistent in your trading approach, right? It can be a strategy-based approach, it can be pattern trading, or it can be price action trading, which falls under discretionary trading, to be honest with you. And unless you just look for some specific setups, there will be some element analysis involved, right, which would require your own discretionary approach, right? So our thought process to determine when is the best time to enable the strategy, or when is the best time to trade, is when the high probability market market is showing that high probability setups, right? So how that composition of the chart will look like when all these indicators that make up the dot indicator, we don't know, right? But we have a hypothesis or a strong theory that when all of this happens, when all the indicators, or 4 out of the 6 indicators, align together in one direction, right, with some momentum, NQ should trade in that respective direction, right? And as traders, we like to join that trend, right? So the dot indicator, let me go back to this one. So this dot indicator provides us with the high probability time period when 4 out of the 6 underlying tickers are aligned towards one direction based on the TTM wave, right? So we have put a certain threshold on those TTM waves that we like to see each of those names to be above or below. So for example, let me show you the data actually. All right, so here is the data, right? So from December 10th is when we started doing it in the simulated environment, right? We have the back tested data as well, and only then we moved on to the sim environment, right? But from December 19th onwards, we switched to live, right? You don't move to live all of a sudden, and you want to see some executions and all that. So this data, this information, these days we traded only in simulated environment, and from December 19th onwards, we started trading live, right? So the idea is that we traded every setup that occurred that day. Okay, so I actually have the individual trades and their time periods as well, and he also puts it together now and puts them in this Excel sheet every day. So for example, on Friday, let's go to Friday, right? This is January 24th. These were the time periods, right? This was the outcome, right? And we tag each setup, whether it was a first pullback or if it was a 50 EMA trade, right? Whether it was a long or a short, right? And then the result. And this result is obviously based on the 20-point stop loss and a 40-point profit, right? You can change it to whatever you want, but this is what we kind of go with, right? So I agree that this data is small. That's why we are just sort of right now showing this thing, broadcasting this thing live, and just so that you guys can make up your mind. You guys can review it, see it every day. How's it performing? So it just helps everybody, stay sort of transparent. And honestly speaking, it gives us the discipline to execute the trades when the setup comes as well, and stick with the plan, right? Because we also have emotions and sometimes we do deviate. And what I have seen in my back testing versus the live trading is that sometimes we did tend to take quicker profits, and that is what caused the deviation. So if you don't do that and stick with the strategy, I think as long as it has a positive expectancy, it should be good, right? So for example, if I draw a chart, right, and I think I did, yes, right over here. So it shows a nice positive expectancy, right? So what does that mean, positive expectancy? What that means is, where's my color? One sec. Strange. There you go. So what that means is that as a trader, somebody can start trading from December 22nd. Somebody can start trading from January 5th. Somebody can come in from January 19th, right? So it does not matter, right, where you start. As long as it has the positive expectancy, the equity curve should go up, right? That's what it means. And it is possible that during that day, let's say if you go to January 24th, this last one, right, you did not take the this setup, right? You did not take the first two setups. That could be possible. You were busy, you were outside, and you started trading from 9:30 onwards, and this was the first trade after 9:30. So you only traded these many trades, right? So it's possible, right? You don't have to trade all day, all the setups. I do personally, right? And he does, but you don't have to do it, right? But if you do, as long as it has the positive expectancy, it should show you the positive positive chart right here, something like that, right? Okay, so going back to the chart itself, right? Like I said, another question that was asked was, will you make it available for NinjaTrader or TradingView? Well, not yet. Have been lazy. I will find out if this code can be copied over to, from ThinkScript to PineScript. I think that is what TradingView requires. And for NinjaTrader, I think it's C#. So I would like to kind of see how I can do that. I'll ask my coder friend. I just, just have to get to it and see if it's possible. I was just trying to make sure if there's anything that needs to be changed. So you only do that once you start trading, you spend time with it, and kind of go with that, right? So, okay, so now let's check out the last maybe week's trades. Okay, so let's zoom back, and these are all my notes in the live broadcast. I keep updating. Sometimes Annie does that as well. And these are support and resistance levels that I keep updating as well. So you will see that they align pretty nicely. And sometimes you can use that as well if you like on the, it's all being displayed live. Okay, so let's go back to, let's say, what is that? January 14th or whatever that is. Okay, so January 14th right here, right? So I usually ignore the pre-market data, but sometimes if you want to take it, this would have been a stop, right? This would have paid you because, and I've gone through in detail where I take the entries. And obviously, if you trade with this and if you have something else that you want to overlay on it, or if you want to combine, right? For example, I like to trade. So if this is if the dot started here, this was the first green bar. That's the pullback, right? So I would have shorted right here. Maybe you want to trade and you want to consider 2-bar pullback, right? So it's totally up to you, right? How you want to use this information. Based on me and myself and how Annie likes to trade this, we like to trade it on the first pullback, and then once the price goes back above the 50 EMA while the dots are still present, right? So this would have been a first short. This would have been a second short, right? Because the price went back above 50 EMA. We got the green bar, purple dots, short. So this was another short right there. So that's what I'm trying to tell you. And let's go to the blue dots. So this was the first bar actually. But since this was the red bar, so this is the pullback in itself. So I did go long right there and then, right? Now let's go to, this was a short right there. Now somebody can say, hey, I want to short at the first start, right? You can do that too, right? But based on how me and Annie like to trade, we like some little bit of pullback, right? So we would have ended up shorting right here. Yes, we missed this back, this whole run down, but that's what our strategy is, right? Okay, let's take a look at a few other names, or actually a few other days. So this was the long trade right there. Somebody who wanted to trade on the first try, this would, the first dot, this would have been the entry right here, right? So you can see this was a second long, right? This could have been a third one if you wanted, but and then this was another one right here, entry. This was another one. This was another long. This could have been another long right there. Dots are still blue, so you get the idea. Okay, let's move to the next day. I'm just reviewing these so that if you are following this thing on our YouTube channel, you can kind of make use of this thing and how to trade this thing, right? So this was the entry. This was the entry right there. 50 EMA entries. This would have been a stop. This would have gone up. This would have been a long trade, so on and so forth. Let's keep going. Let's go to Friday actually, just so that it's the most recent day. Okay, Friday right there. Okay, so these were the trades on, this is Friday, January 24th, right? Short entry right there. This short stopped out. This long stopped out. This long also stopped out because this was a 50 EMA pullback trade. This short paid. This short also paid. No short right there because you can see this short appeared when the dot appeared, right? There, it was not a green bar. I want a pullback, remember? And when the pullback happened, there was no dot, so no trade. So we got saved. This short paid. It went almost 19 points against us, but it did not stop us out on the because our stop loss is 20 points. So nicely paid. This one also paid, and I think we did not trade after that. But had we been on our desk, this would have been another short right there, right? So this gave almost 19 to 20 points. That's about 80 ticks, and then nothing after that. So that's how it is. We'll keep broadcasting this thing live, right? And another question that we got asked was, will you be making it available so people can buy it? So folks, right now you can use it free, right? On the YouTube, you don't have to buy it as long as we are displaying it over there. Annie also publishes her daily results on Facebook. It can help you understand how it's going, see its performance, and even give ideas to us if you want, right? Let us know how you would think that this can be optimized, right? And honestly, I just think, we just need to put it out there for now. Let people see it, review it. I do not want to just start giving out to people who are interested right now. That's really appreciated that you guys think like that, but I just want to make it more, I would say, more visible to people and make sure that they understand what this thing is. No indicator is a magic indicator by itself. You have to come and create your process around it, right? Even if it's an RSI indicator or MACD or some statistics or Bollinger Bands, right? You can take those, right? In itself, they're nothing, right? But what I like about this particular indicator is that it's not based on the NQ chart itself, but the underlying symbols itself, right? So it does not consider any price action related to NQ, but it does consider the underlying symbols. And then you create your strategy, your execution point, based on some back testing, based on your observation, and that's how you trade, right? That's how you create a strategy. No indicator in itself is going to give you profits. So if you look at these results, right, if you go back to this one, I think these are a total of around, if I remember it correctly, how many transactions or trades? About 268, right? And if I count the positive trades, if I did it correctly, it was around, there you go, 129 positive trades. So 48% is the win ratio, right? But since your risk to reward is skewed, right, you're taking 800 and you are losing 400, right, in this example, or in the way we trade, right? So that's 48% win ratio, right? But still, you're nicely positive. And the reason is because of some edge, plus your ATM template is favorable, and you're only trying to enter in a time period when the strategy, when the composition, based on how we discussed initially, when the composition of that chart, it's random, but we are trying to limit the time when we are entering the trades to some sort of momentum in the market, right? And we are trying to identify that momentum with the help of underlying symbols. And like I said, the composition is random, right? We don't know if the chart is going from point A here to point B, right? In like this way, or it's gonna go up like this, or it's gonna go like this, choppy, then down, then up. So we don't know the composition of that day, and these composition is what decides your profit and loss, right? So yeah, just wanted to go over this thing with you, make sure that you guys understand what this thing is, how we trade it, and really appreciate all the nice comments. So thank you guys once again for you guys liking this, and hope to stay in touch with you. Okay, thank you, and have a good rest of your evening. Bye bye.